All right. It looks like we're live here today, back with another top trades, back with Enrique for the second week in a row after a brief absence from him. Got a lot going on again this week. It feels like Trump's been president for 7 years now, and the news keeps on rolling. We got tariffs. We're going to talk a bit about the hyperscaler capex stuff, silver and gold, big rally in precious metals right now. We got Jay Powell on the Hill chatting with Congress or the Senate today, one of the two. I saw him on the TV when I walked by earlier. We got Doge mixing it up, market melt ups. Enrique wants to talk about what to look for in the next bear market, but I think we have melt ups to deal with before the next bear market, right, Enrique? And then GameStop, Bitcoin, Echo trades. So we got a full slate for you guys today. Let's kick it off with
Can I
some.
blow your mind real quick though? Because you just said something I didn't realize.
Okay.
Trump was inaugurated on January 20th. That was 22 days ago.
Yeah.
That was 3 weeks ago. Holy cow. Not even I thought like I'm kind of like, I'm not a buyer into a lot of the hype, but I gotta tell you, and I don't mean hype good or bad Trump, anything like that. It's been 22 days that he's been in the office, and even I'm like impressed. Wow, that's a lot of stuff.
Yeah.
So
It was a big change going from a very, very quiet, absent administration to this.
sleepy is what
Sleepy.
we'll
Lots
call
of
it.
lots
Yeah.
of naps, and now we're at no sleep. So, there wasn't much of a transition. It was just like bang, here we go. What do you make of all the tariff stuff? I know we have some new tariff stuff coming out today. I saw the Ford CEO was complaining about it earlier, saying that it's been chaotic for his industry, maybe chaotic for his stock, since Ford stock has looked really bad uh, for a while now. But what do you make of all this? Where we're
I,
at with the tariffs?
I'm going to apologize for those who watched the Maverick yesterday, because I'll repeat myself a little bit. But also, if you all have been reading Truth and Trends, I think Trump is incredibly predictable. And he's just doing the same thing over and over. And it's what he did before, and it's what he did in business for 30 years. So this isn't like a new thing. He goes out in any negotiation and he asks for 100. He's probably happy getting 5 to 30. By asking for 100, everyone freaks out because the media wants to freak out because they only get paid if you click. The left freaks out because it just wants to freak out on Trump. And to a certain extent, the establishment freaks out left or right because they're not used to asking for 100.
Right.
They're used to asking for 20 and then taking their 10 off the top. And what happens is he asks for 100 and then he gets 5 to 30. That allows the person on the other side to give something up, but then they look like they won because it's like, well, I didn't do 100, I did 14, and so that's where we are in tariffs. And I talk about all the time, price equals truth in the stock market. The market's showing us that, right? These tariffs. I was listening to CNBC at the gym yesterday, and they said if this were 2017 and he put this tariff in that on aluminum and steel that he did yesterday, the S&P 500 might have been down 3, 4, 5%. It didn't do anything. I mean, whatever it was up, it was a nice day. So I
Yeah.
think what's happening, and I put it out here because this is what's going to happen. He's doing it with Gaza. He's going to do it he's doing it with tariffs. He's going to do it all over the place. Just don't freak out. He's going to ask for 100. He'll
Right.
be fine with 5 to 30. And two things are going to happen. And this is why I've been arguing. I think we're really close to a melt up. I think we could get like a real big move, a 10% move in the S&P 500, 5 to 10%, maybe more in the NASDAQ in the next 6 months. Is you do two things if I'm right. Number one, which is the lesser of the two, we're better off than we were because he got 5, 10, 15 out of the 100 that he was looking for. And number two, when people finally realize, and the market's starting to do this, that he's not really asking for 100, all that concern, those worries go out of the market. And that's actually the bigger piece. So, I just look, I don't, what's my opinion on tariffs? Well, I've got all kinds of opinions, but what I really like to do is see what the market's telling me. And the market's telling me is that it's a negotiating tactic.
Yeah.
And so far, he, in his actions, and by the way, his 30 years of documented negotiating prior to that is also saying it's a negotiating tactic. So until I see something, one of those two variables changes, he's just the same Trump that he's been for decades.
Yeah, and to me, it feels like it's just a matter of volume. Like when Trump becomes president, the volume gets cranked to 11, and everybody has to put their hands over their ears for a little while. But then after a while, you get used to it, and the noise doesn't bother you as much because it's going to be loud. That's how it is, right? So I think we're in the period now where the market is getting used to the news, and it's not going to be as herky jerky, I guess, with every single piece of information that comes out. Because again, we're coming off a sleepy 4 years. And now we get Trump at 11, and
Well,
maybe that sort of goes into the background a little bit more.
And the kerosene on all this, and it's funny. We wrote about this in Truth and Trends yesterday, and Mike Wilson, the Morgan Stanley, strategist, who was terrible, he's been terribly wrong, but he came out basically read. I swear to he read my Truth and Trends on CNBC this morning. But the kerosene here is. Think whatever you think about Doge and Elon Musk, okay?
Right.
I said this before. I said this yesterday. I'm sure there's a lot of damage being done. I'm sure some people are going to be hurt. That's unfortunate. But I'm sure there's going to be a lot of costs that can be legitimately cut, and we're better off. And we have seen the single thing, if I went to everyone, the 100% consensus has been deficit goes up, government spending goes up. We've not seen a break in it in years, in decades. What if Doge gets $500 million out, or sorry, half a trillion? What if it gets $1 trillion out? Okay, that's out of the 6 trillion deficit. That's the first movement in the other direction we've seen. It's like we're in the middle of the winter. We're in Alaska, where the light doesn't show up for 98 days or whatever it is. So what was the movie, the vampire movie, 30 Days, 30 Nights? I forget. But anyways, all of a sudden something happens, and it's like, oh, the sun's going to come out when no one expected it. That to me could just be tinder that just lights this thing, because earnings were very good in Q1. The CapEx spend that we got out of these hyperscalers, NVIDIA's going to blow away this number. And I was the guy calling for NVIDIA to go down $1 trillion. By the way, NVIDIA went down 987 billion from that peak on January 5th to the low on Deep Fake Day. I know it's called Deep Seek, but I'm calling it Deep Fake now. But the numbers are good. So numbers are good. Deficit going down. We get some tariff goodies. The world doesn't blow up. And one last thing. Go look at that chart of the S&P or the NASDAQ. Okay. The NASDAQ's actually a pretty good one to look at.
Q's in.
That's setting up to do something, my man.
Yeah.
And I got to tell you that with that kind of consolidation and that range, that's setting to break one way or the other. And I struggle to see how it's going to break lower.
Yeah, it's
it just doesn't add up to me. So when it breaks, and the longer you consolidate, like the higher the break, so the consolidation here is actually go back a little bit further. The consolidation phase is actually to July of last year.
Yeah.
Right? Because that's really where you're looking at on the range. That's the consolidation phase. So we're talking about an 8-9 month consolidation. I'm going to tell you what would be natural on that is a 10-15% move higher. What would be natural on the S&P 500 is a 5 to 10% move. And no one is set up for first half market up 15.
Yeah.
That's just that's like saying the deficit's actually going to get cut, right? No one believes that. And so what does the market do? Well, the old Wall Street adage is it does whatever can F the most people. And so you take whatever people are expecting least, yet still is possible, and that's what could potentially happen.
Yeah. I mean, I can see it, and it feels like, and we were talking a little bit before the call. To me, it feels like the melt up has already been starting under the surface. I mean, we have all of these groups, especially some of the more speculative names that really rocketed higher back in November after the election, and then maybe got hit in December or whatever. Those have come right back after consolidating. All of these groups. I mean, I know, we have the averages in consolidation mode right here, but then you have stocks like Meta. I mean, Meta hasn't gone down, and if it closes lower today, it'll break its 16, 17 day winning streak on this stock. It looks like Apple did back in December.
So,
So many of these stocks are going straight up.
that Apple point is a great one about Meta, and I will say one thing about that too. I heard something very interesting on CNBC. It was a small point. Meta is has a, let me just pull this up real quick, a $1.8 trillion market cap. But when you look at the float of Meta, whatchamacallit, I think there's a bunch of the float is tied up. So the float is actually, oh, this is interesting. So the float's only 73%. So that means that that if you're one out of every 4 shares doesn't trade. So the reason why Apple went up so much, in my opinion, at year end is you had indexed managers that were underweight, and all of a sudden they started having to chase it because it was 7% of the S&P 500. So this indexes at about 4% of the S&P 500, but if you adjust for that float, you could argue it's actually 6%. So you have to chase it. So I think there's something going on there. But sorry, that's just a random little piece of trivia that I think explains why. Because look at that Apple move; it's the same move, right?
Same move, yeah,
same move. So I think that's index managers, and in December they freak out because they don't want to get caught at year end. And by the way, in January they freak out because these are the two. You always get these weird freakouts in December and January. Because in December, the books close, but in January, I don't want to start the year in a 150 basis point hole versus the S&P 500.
Right.
And if I was halfway Meta year to date, let me just do this math. If I was halfway Meta year to date, I mean, year to date, the stock is up 587, 715, 587. So I'm showing you all how it's up 22%. It's 4% of the S&P. If I was halfway, that's 200 times. I'm down 40 basis points on the S&P 500.
Yeah,
all out of the gates. That's a big number. So I think that's what's happening. But I don't know that I agree with what you said. And there's some charts that we shared on the Maverick, but I want to share 2 things. Go back to. Well, I'm going to make 1 point first, then we'll go back here. This will talk about bear markets also. Pull the NASDAQ up from 1998 to February of 2000.
Woo! All right, hold on.
Hold on. You're going to see where I'm going with this, though, when you see it.
See if I can do it.
I don't even know QQQ was there. Okay, so there it is. So,
it wasn't
but pull. Oh, it wasn't. You're going to have to go to CCMP index. Can you do that? I don't know what NASDAQ is on your system. Just type in NASDAQ.
Yeah, we'll do this.
NDX.
Is it just NDX?
Yeah, the 100 should be fine.
Okay. So we're going back to the 90s here.
We're going back to the 90s.
All right.
But here's what I want to show you. Now, cut that chart off in February of 2000. Okay. So this is great. This is what I was saying on the Maverick yesterday. Look at how this thing went up, 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 up. Then it accelerated a bit in 99. But look at that blow off top. And that was December to February. The thing was up 50%. That is a bull market blow off peak. And I apologize for the Maverick folks, from yesterday. I'm going to tell you this. That's a blow off peak. That's what it looks like. When, in 2008, when you had, some carpenter in Miami who owned 14 condos and they were all in contract and he's flipping the contracts for 100,000 gains, that's a top. And in 2022, when we've got NFTs and we've got crypto and we've got GameStop and all this stuff, that's a top. So I hear you that Meta's up 14 days in a row, that some of these quantum stuff, but I don't even it's dialed up to 4. In terms of bubblicious, in my opinion. And we'll get there. We'll get there. Oh, yeah. I think we get to 11 on the dial before it ends, but I just don't think we're there yet.
Yeah, I'm not disagreeing with you at all. I just feel like it's starting to percolate. It's starting to
Yeah. I agree. But it was percolating last year too. It's been, been on a low boil for probably 6 to 12. And that gets to look at echo trades. We haven't talked about that a little bit. Someone was asking the other day. I think one we talked about was TWLO.
I'm sorry. What's the ticker?
TWLO. Twilio.
Oh, Twilio. Yeah.
Yeah. and pull up the 5-year there.
Yeah, starting to move here.
So this was one of our highlighted echo trades.
Mm-hmm.
And lo and behold, what we were saying with the echo trades is that when you get into year 3 of a bull market, what will happen is companies that were at all-time highs in the previous bull that then got cut by 90%, if the company didn't go out of business and the company continued to post results, that those companies will potentially revisit some of those levels. And so what we're seeing very natural 3rd-year bull market kind of price action.
Yeah.
Eventually this all ends badly for a period of time, but I don't think we're there. And I'll tell you, the thing that I think people are going to look back on, this whole Doge thing, if we cut $1 trillion out of the government spending via Doge, I just mind blown. And we know it's there. It has to be there. And I think that's what the market hasn't had in wasn't on its bingo card, is that Doge actually gets $1 trillion or $500 billion out. And I think that'll be a huge change in sentiment if it happens. And I mean, my bet is I think it does.
Yeah. Yeah. Going back to something you said earlier that we just briefly touched on, you're saying you think NVIDIA it's done its almost $1 trillion correction, and you feel like it's going to beat and potentially have a huge positive reaction to these earnings coming up. Was that what? Am I putting words in your mouth, or is that what you were?
No, that's what I said. I mean, when you look at, I shared on the Maverick yesterday. I usually do the Maverick afterwards, so then I'm apologizing to everyone that's on the Maverick call. I apologize that they got to hear what I said on Top Trades. So this is a little bit of revenge, but. We had all the numbers come out of the hyperscalers, and I shared a chart that maybe we can send out. I'll send to you. Okay. I'll actually send it to you on Slack right now. We had a chart that came out of one of these media things showing the spend by the big hyperscalers. This is Amazon, Microsoft, Meta, and Google, and it's through the roof. And my hypothesis on NVIDIA, which I guarantee you I'm going to be right at some point, is that eventually these people spending this money will move from building network to building applications on top of the network to make the money off of the network. When they do that, their spending might not even go down, but it'll be bad for NVIDIA because NVIDIA sells the rails to the railroad, doesn't necessarily sell the engine or the box cars, and certainly doesn't sell the sales force and the people to drive the trains. But then I also think eventually, and we've seen it before, we saw it when AWS was built, we saw it with Meta and some spending, we saw it in the early 2000s, the spending is going to go down. And so then I think NVIDIA, not only will growth decelerate, I think they're going to disappoint numbers, and they could see earnings actually go down. Semiconductors are a very volatile business, even though I know these are super value added and all that. That's going to cut that stock in half. But with everyone taking their CapEx up 25% out of the gates, I don't think that's going to happen here in 2 weeks when NVIDIA reports. So I think that the market, with that $987 billion loss in NVIDIA, was beginning to come around to my thought process. That's why the stock hasn't done anything for a while. Right. That's why, that's actually what hurt it with DeepSeek. It wasn't necessarily that was a component of it, but it was so well owned, all this, we've beaten that out of it. And I think they're going to come out, they're going to report a great number. And I think the stock goes back up towards the old highs. It's not it's an okay trade. Someone asked me this yesterday too. It's an okay trade. It's not my favorite. But I think that also gives more legs to the melt up. So $1 trillion out of, by the way, the deficit, I thought the deficit was, hold on a second. I'm trying to look at the US government. The deficit's $6 trillion. I'm actually trying to find out how much we actually spend. It's hard to find that number, but $1 trillion would be 15% of the deficit. Tariff wars don't happen, and NVIDIA and AI boom continues. It's all very good. So I got my $1 trillion sell off. I think we're going to have another one, except it'll be bigger. But I'm going to push that to the second half at this point, just because I'm responding to the data. I didn't have the data that every single one of these companies would come out and increase their capex by 30%. Mind blown. I'm blown away that happened, but it happened, and they may reverse that, but they ain't reversing it in the next 3 months, and they ain't reversing it in the next 6 months.
Yeah, I mean, that makes a lot of sense. It's hard to argue that point right there. What about Powell talking today? I mean, and basically saying what we thought he was going to say, with them still being in really no hurry to lower rates right here. It seems that the market is absorbing that, and that kind of removes another question mark from maybe something that the bulls were thinking about over the first 6 months of the year, is how many cuts are we going to get? And it seems like, we're in wait and see mode.
I'll go back to what I've been saying since late last year. They don't matter right now. The Fed doesn't matter. Interest rates don't matter. Inflation doesn't matter. Now, that's not to say that those don't matter often or in the big picture. What I'm saying is, I don't think interest rates are going to move a lot. They're going to be between 4 and 5. I don't think inflation's going to move a lot. It's going to be between 2.5 and 4. I don't think there's a lot of volatility in it. I don't think the Fed's going to do a lot. So we're moving from a market and I don't know if you can pull up the Fed funds or the rate on the 10-year, but the Fed funds would be ideal. We're moving from a market where we had very rapid, a ton of hikes, coming in that didn't really move the rates all that much. I mean, they moved it from 25 basis points to 4.5. That's a move, but it's not 10%, 15%. Thing that would get me really concerned. But now they're telling us they're not going to do anything, and I don't think they're going to do anything. And so if they're not doing anything, then the Fed doesn't matter, right? That should be a logical assumption. If the Fed doesn't really move very much, well, then they shouldn't matter very much. And that's exactly what's going to happen. By the way, the last time we saw this market, we're so used to post-Greenspan and year 2000, for the last 2 decades, we've been in this schizophrenia with the Fed. Well, they got to cut by 500 basis points. Oh, they got to raise by 300 basis points. Before that, in the late 90s, you know what they did? They cut by 25. They raised by 75. They cut by 50. And that market, go back to that chart that I know. What did the market do? The market went boom, 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 melt up. So I think we've got a very similar setup. AI, and I've put this out there before, Chat GPT is Netscape. The first consumer introduction of a big game-changing technology. And I think we're there again.
Yeah, Web 5.0. I don't know. I can't keep track of what version of the web we're supposed to be.
So by the way, it is actually, the federal government spends $6.75 trillion. So if we cut $500 million out of that, $500 billion, you're talking about a 10% cut. That's amazing in government spending. I mean, I'm impressed. I'll be happy.
First time in a while.
I'll pull up that chart. I don't want to distract from everyone, but I don't want to first time in ever. I don't know.
Yeah.
So Nvidia loses $1 trillion, and so does government spending. How about that? People didn't have those on their bingo cards.
Just balance out. Easy.
Yeah, exactly.
Let's talk a little bit about silver. You wanted to talk about silver, precious metals. I mean, we have this big, huge gold move here that seems like it's almost going parabolic. We had a nice rest following the election where gold cooled off, and then it posted a really nice breakout for us late last month, and it's just really ripped here to new all-time highs. Gold above 2,900. Silver, time to play catch up with the silver trade since it's been kind of sluggish.
Well, I'm going to write a note on Monday for Truth and Trends. three things you didn't know about gold. Which there's some things that I think people don't know that are very data oriented. One thing I'm going to tell you about gold, and then we'll bring it back to silver. And this goes back to the conversation we had in late October. Gold is a great technical trader. Okay, just like crypto. Here's why: we don't use gold for anything. Gold has no earnings. Gold has no cash flow. Industrial uses are de minimis, just like crypto. Okay, I know that one. There's no industrial uses. So historically, when you look at trading gold using RSI, especially overbought, gold responds very well to overbought. The RSI on gold right now is 78. Okay, the last time it was up here was back in that late October peak. So number one, I'm constructive gold. I'm bullish gold, like all that. I wouldn't buy gold here. I'd be taking some
Yep.
profits as a trader. But number two, like, what did we see happen before? And I don't know if you can pull up two charts on there, but if you can pull up silver and pull them up to juxtapose them, what we had before is silver played catch up. And, silver's had a decent run here.
Where'd it go?
But I think that silver is gonna close the gap. So that's been and silver has many more industrial uses. Yeah, there you go. That's the chart I wanted to see.
Yep.
So, look, silver's had a good run when gold's gone parabolic, but I think you're going to see it. So, we did this before when we were talking about gold. I think everyone got a lot of people got really upset with me when I said I'd sell gold in late October. That was the top for the next 3 months. I'd sell gold right now.
Tactical.
It's tactical. We're not here. Like, look, if you want to own gold for the next 20 years, well, then own gold for the next 20 years. Yeah. I'm telling you how to make money in the next 60 days, 90 days. That's why this is a trading call, not a long-term investing call. I'd sell your gold and buy some silver today.
Yeah, I like that.
I love that trade. I'd sell. By the way, I'm going to go off topic here. I'd sell your Meta and buy some Microsoft.
Trading Meta for Microsoft. I like that too.
I'm totally off topic, but it's the same darn trade.
Right. Sure.
Right. Yeah, because Meta, if Microsoft doesn't work, Meta ain't going to work. I'm going to tell you that. And by the way, if Meta doesn't work, if Meta doesn't work, neither. Well, yeah. So. But it's the same thing. If silver doesn't work, then gold's not going to work. I'm going to tell you this, right? Yeah. And so these traits sometimes they're related. But yeah, I would sell some Meta to buy Microsoft today.
Yeah, I like that. I like those market relationship type trades right there. Those are always interesting. So moving on from gold to Bitcoin right here, you have an interesting take on GameStop that you wanted to get into.
Well,
GameStop and Bitcoin. We've talked about this before, but this is important stuff.
I won't trade anything that I have any official recommendations on. Okay. Like I just won't do it. It's just my decision, for various reasons. I may take my own personal money and buy some GameStop, which tells you how strongly I feel. I don't know if you guys remember back in the fall with the stock in the low 20s, I basically went out and said, look, that you got a smart, clever guy, Ryan Cohen, like him, hate him. Doesn't matter. The guy's made a lot of money for himself. He owns a ton of GameStop stock. They've got $4.6 billion of cash, net cash. There's no debt. They're not losing any money on their core business. And I said at the time, I go watch and see if he pulls a MicroStrategy, Michael Saylor, and goes out and just parks $2 billion of it in Bitcoin. What happens to the stock? Well, look at that chart. Go back a little bit further on GameStop. I said, I think right there, I think the stock goes to 40 the next day. Lo and behold, over the weekend, I forget who posted, I think it was Ryan Cohen on Instagram or something, a picture of him and Michael Saylor in these obnoxious white tennis shoes. I can never understand the Jerry Seinfeld white tennis shoe thing. I apologize for anyone that's wearing, that likes the white tennis shoe thing. But anyways, him and Michael Saylor. And so the stock was up, 15%, something like that. And, I love the risk reward on this. I think that like, by the way, if you bought it when we talked about it in the low 20s, you had a chance to sell it at 35. But I'm going to say what I said before. I think it is a high probability bet, 70, 80, 90% that Ryan Cohen comes out and that with their $4.6 billion, GameStop buys some Bitcoin and this stock trades higher, whether that's 30, 40, 50, or 100. All of them are very believable. I think it trades higher, and I think it's a heck of a speculation. I think it's actually a very asymmetrical risk reward. The 4.6 trillion is only about $10, $12 a share. But, this stock actually now has a really well-established base around that $20, 20 to 25. And one thing you and I were going through before the call, and I don't think you can pull it up, is the short interest. Prior to the return of Roaring Kitty in May, June, there were 130 million shares short of GameStop. You couldn't get a borrow. Now, there were 68.4. 139 million was the trading volume. 68.4 million shares short. Now there's 31 million. Okay. The short interest has dropped tremendously, which makes sense because before they had $500 million and they were burning money. Now they got 4.6 billion and they're not burning any cash. So I love this trade. Like I hear we're giving away free trades today. Sell your gold, buy silver, sell your Meta, buy Microsoft, and buy GameStop. Because I think people are going to make. This is a fantastic. Like I said, I put my own money in. We've already talked about it, so I won't put it in the Maverick because I'll feel bad like saying something we gave away for free already and putting in a paid service. But I like it a lot.
Well, I like it too, and I mean, and even more so, I think is the fact that no one's eyeballs are really on GameStop right now. It's kind of a has-been meme stock, which is even better since it's completely under the radar compared to something like, the quantum stocks or the alternative energy plays, the space plays, all that stuff that's popping these days. GameStop's just sort of sitting around waiting for this catalyst, this potential catalyst here.
And getting back to echo trades, this is my point about echo trades and things like Twilio. Take this chart all the way back to 2022. 21, sorry. Okay, there you go. It traded at over $120 per share. So there are people out there, even if it's crazy and stupid, that were willing to pay over $100 per share for it. So I'm telling you, there's people out there willing to pay over $100 per share for this. So, that's what you want to put yourself in position of. We know, go pull up the chart of Coca-Cola. Okay. They just put up decent numbers.
Yeah, they put up good numbers.
The stock's recovering. But look at that chart and take that one chart out a little bit further. All right, take that out to a 5-year chart. So the 5-year, the stock's traded between 55 and 74. I'm going to tell you, there's nothing that's going to happen in the next 3 months where people are going to be willing to pay $100 a share for Coca-Cola.
Yeah, that's fair.
Period. End of story. And the data's telling me this, right? But for GameStop, for Twilio, for all these echo trades, that's not the case. I have data that tells me people are willing to do it. So that's when you price equals truth, right? Understand the future. The past is the best predictor of possible future outcomes.
Yeah.
Okay. And people can't wrap their head around that. So yeah, I think the GameStop high. I think GameStop is a really interesting speculation. Yes, Matt Holdhouse. I said sell Meta and buy Microsoft with the proceeds.
Yeah, I like that. I like these pair trades these pairs trades we're throwing.
Well, they're kind of pair trades because I didn't say go short. I mean, you could. I'm not recommending. I did that professionally with billions of dollars for decades. I actually think they'd be decent pair trades. But in my olden years, I just don't do the short side and do the long side and find out I do pretty well.
Yeah, keep it simple. But the thought process though is the interesting part.
Yeah, exactly.
Relaying to people here. So what are some other trades that we're looking at here? I know I have a lot of speculative stuff that's been absolutely popping off, and that's why I was talking about these rumblings, these melt up rumblings that are happening under the surface of the market.
Can we go through your kicking? And I try real hard not to curse in these calls, but you're kicking ass, man. So I think you really we're entering, but getting to what we were talking about before, your stuff I feel like does really well when we the bull market begins to stretch its legs. Yeah. And so it's funny is the fact that your stuff is performing so well. So my stuff does well when a bull market recovers from a correction. Yeah. So my stuff has been popping off for 2-3 weeks. Okay. We've taken in the Maverick. We now have 10 closed trades, 9 of 10 winners. Okay. We're just clocking winner after winner. Some of them we've held for 5 days, something like that. Your stuff is starting to pop off. That to me just speaks to this coiled spring that exists in the market right now.
Well, yeah, I mean, we have a situation where, like we've been talking about, a lot of the Mag 7s have been marking time, trading places. Some have been doing well, some have been sort of resting, and that's sort of led to this, this sideways market action. But under the surface, you have, I'll just go to ASTS we just closed out half of our speculative position on this yesterday. We have these stocks that, once again, like you were saying, historically, I mean, this thing was a massive runner in the summer of 2024. And then we had this huge consolidation right here. Plays like this started to break out, and then they really started to break out, and they started to extend, and we're seeing that across the board in a lot of these. It's not just the echo trades; it's some of these more speculative names and these space groups
I
in the
I
quants.
feel I feel like post the election, it was like one big market party
Yeah,
going into year end. Everyone and we pulled forward returns into about 2 weeks before December. Because remember, we had a bad finish to December. Santa Claus rally didn't happen.
yeah,
And then that kind of built on itself, and the market bottomed right in the beginning of January. January 13th is, I think, when it bottomed. And I feel like now the body we drank a bunch of water, we went for a walk, the hangovers kind of like dissipated in the
yeah,
market, and now people are like, hey, I think I'm going to go out this weekend, and that's kind of what's happening in the stock market a little bit.
yeah,
Like, and so these happen after the good stuff, the great stuff. And I'm not saying ASTS isn't a great company, et cetera, but the big, well-established, the Vistras of the world,
right.
those kinds of winners, they recover first
Yep.
because they're just better companies. Like, it's not a real insult or anything. But then the rest of the stuff catches up as we kind of relax and get through that, hangover period from the awesome party that happened in November and early December.
Yeah, and these are those trades that we talk a lot about asymmetric risk return. I mean, these are the perfect opportunities here. You don't need a big position. You can anticipate a little bit here. You don't have to really wait to see it go, and when you're going to be wrong if it ducks back into this range, and you can just make big money very quickly, which is what we were able to do on a play like this. And it's not just in the space stuff either. I mean, like if you look across AI, like you said, it's been trickling down the cap scale into names like, I know Big Bear. I think somebody mentioned that in chat. That's been a big winner. I mean, just look at these moves here. This is one of those ones that I missed, but I mean, come on, you get a break above $5 and the thing practically doubles in just a few
I,
sessions. I mean,
I love it. And if you use what you do, relatively tight stops, not even that tight. I mean, they got to be a little loose because these things are all really volatile.
yeah,
Which I'm going to talk about something in a second with that. I like it, and that's one thing for people to understand too is that like I just one thing because I've been getting a lot of questions on some things that we've been doing too. You got to understand that with volatility, when you're buying something, if you buy something that you think you can make 30% on, I'm using just stocks. We'll take it over to equities in a second. Understand that you're very likely to lose 10% in the next day. Okay, the volatility is symmetrical, right?
mm-hmm.
And so that's the same thing with the options. And I think the options people are more used to it. But that when you buy an option for $2, you think you could make 300% on it. It's very likely the next day you're going to lose half your money on it.
Yeah,
Like that's just how this goes. And so you have to accept volatility. We had something we put into Maverick yesterday, and I think it's down 4% from when we put it in, and people are like, "Oh my gosh, it's down 4%." I'm like, "Yeah, but we're paying for 30."
yeah,
I'd love to say that everything I'm playing for 30, I go in, and the next day they start working. I gotta tell you, that never happens. More often than not, if I took all I made 30, and I don't know if this is true for your options plays too, but if I took I made 30%, I would tell you the vast majority of them, I lost high single digits before I made the money.
yeah.
That's my strategy, but with your strategy, you got to be willing to take the volatility.
Well, yeah, and part of the deal with volatility, the way I combat it is I talk about position sizing. With something like, if it's going to be an ultra volatile play, then you should have a much smaller position, and that way you can
Yes.
ride out these moves. Otherwise you're going to get stuck getting stopped out and selling when you shouldn't be. I mean, like those situations happen, but at the same time, if you just control your position sizing, on these, and you just need a little bite, and that's the great part about options too. You just take a little bit, and you're fine, and you can rack up these huge gains there, and then you can sleep at night too. We had a question about a ticker SN. I'll put that in here. Something that I've been watching right here. It's been attempting to break out along here, but we have earnings coming up. This is one of those plays where I was looking for a potential break and run ahead of earnings. If something like this doesn't extend, I would probably cut it loose before earnings because I have no idea what's going to happen on earnings with a play like this.
I'll say a couple things. Holy cow, this thing has a $15 billion market cap.
Yeah.
Mind blown. Okay. They have been beating numbers, but they report in 2 days. Last number that they reported, they beat the number and the stock traded down 17%.
Yeah.
That's got me a little concerned. Because I'll tell you this too, things like Shark Ninja that have a $15 billion market cap. I've been doing this a long time. I buying Shark Ninjas at $15 billion market caps is a dicey proposition.
Yeah.
It's just there's only so many blenders that you can sell in the world. And by the way, let me just look at some. I haven't looked at this. I've actually never looked at this stock. It trades at a reasonable 26 times earnings. I'm kind of with you. Like the thing that would scare, I love the operating momentum. I love that the fact the stock's been up. This is one that I would definitely be interested in buying down. I mean, if you would have bought Shark Ninja off the back of that last earnings report, you crushed it. That was in early November. This would be an ideal fit if it gets a noisy number. But going into the number, considering the last number was noisy, and with the stock up near the highs, I'd stay away. That kind of,
Yeah, if you attempted to buy a breakout here, I don't think that's a bad trade playing into some sort of pre-earnings melt up, but I wouldn't hold this over earnings. It's been a great momentum stock.
Yeah.
I just can't bring myself on a name like this, like you said, a smaller name, a more volatile name, to assume that you're going
and they report before the market on Thursday, so I just wouldn't, you got one more day to play here.
Yeah, a decent attempt here, but and again, like taking stabs like this at the market in this type of market make a lot of sense. You just have to know when it's time to say, okay, something like this, maybe I get out for a small loss and just don't worry about it and see how it sets up again after earnings. But it's not something I would step in front of that train.
Yeah, sure. Yeah, I agree with
that. What are some other names that we're looking at here? I think I saw a few tickers.
Well, people were asking about the silver stocks. I mean, the silver stocks are just, volatile leverage version of silver. So
yeah, I mean, there's WPM, which is a decent silver play. I know that I prefer trading the ETFs when it comes to miners. Less of a chance of some sort of weird earnings or news interruption.
Well, yeah, that's what I was doing. I was going to do something. Someone was asking about gold miners yesterday. Keep on going. I've got a stat that I want to share. But I'm looking it up.
Yeah, SIL for your silver miners, SILJ if you want to play the juniors. Maybe you get a little more volatility with those. It's up to you. We've played both over at the trading desk before, and they're great trading vehicles. It's something that I like to play. I like them both right here. I like the idea of silver catching up to gold, like Enrique was saying. I think that's a solid play. I wouldn't want to jump into gold right here, like Enrique was saying either. I think that gold is stretched, and we're seeing one of those candles right here that's sort of giving that away. Where you look at RSI, extremely overbought here for the metal. Even going back here, and again, it doesn't mean that it needs to go straight down. But if you go back to the last time that we were close to this overbought, we had huge overbought readings during that initial rally in 2024. And once we tag this level, guess what? Need to mark some time, need to blow off some steam. And that's probably going to be the case here too. I'm not saying it can't run to 3,000. It might. But at the same time, I think that the more likely scenario is gold needs to mark time, let moving averages catch up and all that good stuff. And maybe silver can play catch up during that type
and
of.
So people were asking me about the gold miners the other day, and I was looking for the stat. Gold has a $12 trillion market cap or whatever it is off the top of my head. If you took every gold miner in the world, they've got a $300 billion market cap. Okay. That's like, I'm joking, but there's companies that have buybacks that are almost that size. Like, I mean, I don't know. Apple's buyback is 150 billion. So I agree with you. The diversified approach is the best way to do it. But more importantly, I just wouldn't, I can't speak to any individual gold miner because maybe the stock isn't extended. But then I'm going to tell you, if you've got a gold miner, I'll tell you what I wouldn't do is buy a laggard gold miner with gold doing what it's doing.
Yeah,
because that stock's telling you something. I would stick with the ones that have been winners, but I love the silver. Sell your gold, buy some silver.
Yeah, I mean, my general rule is, and I don't do too much fundamental deep diving into these companies, but like miners are generally bad businesses. They're just not, they're not great businesses. And I treat them as such. No
So,
one, no
so
one has wanted to own them for decades, for over a decade now.
Patrick Cross
Great.
is asking a question about gold. We don't usually go here, but I'm going to answer the question because I have the same question, Patrick.
Okay.
The concern is, will there be some sort of transactional U.S. holders of gold? Will there be some sort of transactional fee put on moving the gold back to the United States from Europe? Will there be some sort of tax or something like that? So it's actually, as people get more concerned about tariffs and retaliation with your gold, you want to have it in your physical, in wherever you're domiciled. You would prefer to have it in your physical, within your own country, because then you can't have it happen like what happened with Russia, where they had a whole bunch of assets domiciled in other countries, and then there was a disagreement, and then those assets became hostile. So the reason I think that there were the 500 tons that were taken from European vaults was basically U.S. gold holders were saying, well, if all the people start getting retaliatory and all these bullets going back and forth, I'd rather have my gold in my domicile, my country, than having it in another country. That's what I think is going on
Yeah, that's fair. Let's see. I'm going through some other tickers that have been submitted in the chat. We had a question about SE, I think. That's something that's come up in some scans recently. C Limited, that's a strong chart.
It's a great
This
looking
thing has
chart.
been marching higher. I think it's probably short-term stretched up here, but we don't have earnings until beginning of March. I would be looking for this to consolidate and maybe try to grab it closer to 120, maybe lower than that. Just
I'm
because
going.
it's so strong here. But I know Enrique probably has a different take on it.
Well, the chart looks great. They're growing earnings nicely. They've now gone to profitability. The earnings revisions the last 14 months have been very strong. They've been also, well, they keep on missing numbers, but I think it's probably the EPS. These international things are kind of noisy. They've been beating EBITDA numbers. Look, it's a good core, strong stock with good operating momentum. I worry a little bit about C because it's a little bit of a black box. I don't know, the Amazon of a whole bunch of Asian countries.
Yeah.
That, is kind of freaks me out a little bit.
Sure.
But I guess black box can go both ways, though, right? They can fake the numbers, for a good long time too. I think this. Look, I think it's a good core. It's got good momentum, etc. Would I buy it right here? I mean, I go with you. It's got an RSI of 70. It's good. I don't see a great tactical entry point right now.
Yeah, but I mean, hell of a chart, and like it's been going straight up since the beginning of 2024. Can't argue with that.
Well, and that's, by the way, that's exactly when the numbers bottomed. Like if I could show the earnings revisions. Someone's asking about Open Door. Open Door is fascinating. The problem I have with Open Door, I mean, the chart looks like death. And the problem is they just have all that financial leverage. So, I mean, I'm just going to give you a thought about the universe. If you've got a highly leveraged financial or something with leverage to financial leverage, and it's trading in the low single digits and it's done nothing but go down, just don't own it. Just don't own it. Like, financials are one area you don't want to mess around with single digit. We used to call them single digit. I don't know what the appropriate word, midgets is what we used to call them. I don't think I can say that anymore. Single digit stocks, like, I just wouldn't mess with it. It's a cool story, but
sure. Yeah, a chart that looks like this, that's not gonna be high on my list, because there's lots of charts that look a lot better on the market too. Think of it that way. It's opportunity.
I mean, 99% of charts, 95% of charts look better than that.
Yeah.
So it's not just lots, it's all of them. So you don't need this in your life.
Dawn was asking if I'd rather buy gold or Bitcoin. Well, I mean, it depends on what your goals are. I think Bitcoin is more of a momentum play right now. It's consolidating. I still like Bitcoin up here. I think it breaks higher out of this consolidation area. Maybe we need another nice fake out candle like the one we got.
If your goal's making money as a trader in the next 90 days, I would buy Bitcoin. I'd sell gold and buy Bitcoin.
Yeah, for sure. If you want to hold gold long term, so be it. But yeah, for trading purposes,
well, I'm going to share. So I shared one. The whole truth and trends is going to be messed up now. I shared one thing about the things you didn't know about gold is that it's a great technical trader. It trades off of overbought on RSI. And that's really interesting because almost every asset trades off of oversold on RSI very well. Very few assets trade well off of RSI overbought. It's a quirk. I'm going to tell you the other thing. You only make money in gold when risk assets are doing well. Period. End of story. Okay. So people always talk about gold is uncorrelated. You want to own gold in a bear market, etc. Both of those are true, but that's because stocks go down 40% and gold goes down 3%.
Yep.
Okay. It's to make money in gold, you want a risk on environment. Period. Once we got out of that 70s period, which remember, gold wasn't free floating before. So you got to throw that out. Okay. Because gold is free floating. Once you get to the 1980s beyond, the only time you've ever actually made money in gold, we're not talking relative performance, protect your capital, both very valid things, is when the market goes up. So gold is a risk asset in order to make money. And my goal is to make money. Like, I mean, I have like in my trading account, there's other places I want to preserve wealth. But if your goal is to make money, gold is a risk asset. You need risk assets to do well. So my point is that if gold makes money from here, Bitcoin's going higher because Bitcoin's also a risk asset, to me, when we talk in 10 years, people are just going to say gold and Bitcoin, and they're going to talk like they do silver, with the only difference is people actually use silver for something and they don't use Bitcoin or gold for anything.
Yeah. Yeah. Interesting stuff. Let's see. Maybe I have time for a couple more charts. Enrique, is there anything else you're looking at that you want to talk about?
I mean, I will give away a free idea, actually. Oh. Here we go. Let's talk about this. I probably should do this on the Maverick, but I'll do it here. I'll give it away on the Maverick, too. We just traded in the Maverick. It's a closed trade, so I'll talk about it. And I know there's a lot of overlap here, but I want to respect people who've paid for the Maverick. We just closed a trade on Liberty Braves, BATRK. Pull it up.
Or TAK?
BATRK.
Gotcha.
Sorry. There you go. And Mark Darnell, who's a great supporter. I appreciate all of your interaction, Mark. Great questions always. He was asking me, he goes, well, doesn't this go higher? The whole thesis is that, sports franchises are worth a lot more and all that. Yes. I think Liberty Braves get sold for $50-$60. Okay. But what we were doing in the Maverick is we were doing a trade. We said these things are hugely valuable and that when they get to this RSI, you very rarely get here, you buy them. And we bought it. And we made 10% in 20 days. Boom. That's what we do with the Maverick. Okay. So I got the next one for you. Free idea. I just decided to do this. Okay. MSGS. Okay. This is as good an idea as Braves, maybe even better. Pull up the RSI.
Coming. Boom.
Okay. MSGS, holding company, Madison Square Garden Sports Corporation. They own the New York Knicks and the New York Rangers. The company has a $5 billion market cap. The company has essentially no debt. The Knicks were most recently valued at $7 billion. The Rangers were most recently valued at $3.5 billion. The total value of those franchises is $11 billion. If they actually sold, I think they would sell for 15 or 20. The stock is down because there's some noise about their television contract. I think if the contract got swapped out and Amazon bought it, they'd make more money. Trump is also going after this like weird thing with sports teams where people who buy them can use the losses against ordinary income and depreciate the purchase price across 10, 15 years. This thing trades at a third of the value. I don't think the owner, Jimmy Dolan's a seller, but I don't care when I'm buying two of the rarest assets on earth. I happen to be a Rangers fan also. Phoenix Suns, not Knicks in this case. This thing, I think you got an easy 10% in this stock in the next, 3 to 6 months, so it's not a burner. Like it's not, this isn't, I don't know, like to think of like we were talking about ASTS, like, this isn't GameStop. Right. GameStop, I think you got 20% downside, maybe 10 to 20% dice, and you got 50 to 100% upside. This here, and I think there's a 70, 80% chance I'm right. This here, I think there's a 95% chance I'm right in the short term, and you got, 10% upside. And across a longer term, this is a stock I would buy. My son's 11 years old. I would go, and my daughters are 8 and 3. 8 and 4. I'd go and buy it and put it in their accounts, because at some point this is going to be a $500 stock.
It's a great area. It's at 2 right there. I love it, sitting perched on the 200-day, and then you have those
love this idea.
Previous shelves of support back there. Great spot.
We are all about the free trades today. GME, MSGS, sell your Meta, buy Microsoft, sell your gold, buy silver. This is just to think this call also used to be free on YouTube. So then it was double free.
Well, that's great. Great play. Awesome. Thanks for tossing out the free idea. I think we'll leave it at that so far today. I think we've covered a ton of ground here once again.
I'm gone next week because I'm in Arizona. So I kind of, here's what I did is I'm going to be gone next week. So I made up for it with a bunch of money-making ideas.
There we go. But I will be here. I will be here next week with who knows, surprise guest. You never know who will show up here with me on Top Trade.
Maybe you'll get Michael Saylor on.
Maybe I'll give him a call. I don't know if I have his latest number. I'll check. But yeah, I'll wear some white sneakers and get Michael Saylor on. Maybe we can talk some Bitcoin. All right, guys. Well, thanks for tuning in today. Thanks for all your questions. Enrique, thanks as always for all your insights. We appreciate it. Thanks for the free trade. And, as always, we'll go back to these and we'll hit on these themes as the weeks progress, and enjoy your week out west next week. And for everybody else, we'll be back here same time, Top Trades Live, 11 a.m. Eastern next Tuesday, and we'll see you there.
Let's go make some money.
Let's do it.